Hello guys, and glad to have you on board again today, talking about our beautiful crypto market. There has been a little bit of volatility last week, and let's talk about it. But even though I'll get quite to the conclusion right now, it really feels like it has been a lot of neurons firing recently for I don't think that much reliable reasons, and therefore we're going to try cooling down the system today. So, trying to give it a little bit of rational analysis, how big of what we've done recently is, how big could it be in the future? Is this actually a thing, or is this just another trap for a mindful trader and wishful thinking that I've seen all over the place throughout the recent year? 72 hours or so. So I was waiting for the weekly candle closes anyway, just to figure out if we're going to have some kind of a drop off right before the candle close. Didn't really happen, which also leads me to believe that investors are not really nervous about the short term future and basically what's ahead for next week. So, as I have mixed feelings about the potential to the upside, and in the same way, I don't see a rush to the outside and exit door. I don't think that there is an emergency, urgent trade to trigger just of right now, but to most importantly, looking at the signals that might emerge within the next few days. So first of all, we have a look in here at this broad-based analysis. So more of a relative strength analysis in here, trying to figure out if everyone's playing the same cards, yes or no. And we would definitely say yes, even though I would split last week's behaviors into two sets, into two groups. The first one being those who managed their way up to the previous week's resistance, which has been the case, for example, for Cardano, slightly but still doing it as well for XLM. XTZ didn't manage to do it, failed below last week's, below the previous week's high point. Ripple managed its way into this. Neo, which I think is the it was Link. Link managed to do it, even though Link didn't manage to do it. Sorry about it. Link failed last week's below its previous week's high point. Ethereum somehow managed it throughout the weekend. BNB failed. Neo failed. So it's pretty much two groups: those who succeeded, those who failed. But anyway, I would definitely say that those who failed managed their way up their resistances earlier this week. Eventually, just not IOTA, which could still have it to do. So anyway, despite these two group analysis, I would say first and foremost, we definitely need to have a look at our big boy Bitcoin as a reference. In terms of correlation, I would say that, dollar has been impactful recently. We can see that the largest market top has been made because of a dollar rebounds. But until then, still feels like dollar might be the leader of whatever the movement is into Bitcoin. But at some point, I don't think this is just all about dollar. It's just that we're amplifying the dollar behavior, of course, but the dollar's course right now feels definitely unable to analyze. Let me just give you a little glimpse of it. So I suggest today we should do eventually Bitcoin analysis versus DXY, and eventually trying to have a look at a couple coins like the overperforming ones like Cardano, or eventually Link, as I have a feeling about Link that I'll get to share with you guys today. So anyway, DXY first. We don't generally analyze this one, but as dollar seems to be the center of the maze, let's have a quick look at it. Oh, Jesus, that's not what I wanted to do. Sorry about it. Let's switch to a normal chart and get the DXY here. Okay, so here it is. Daily chart, as you can see, dollar is, oh man, I don't know what that is. But in my personal assessment, what we're dealing with in here is just an ugly fat two sets of waves mature range onto the lower time frames, terminating with the trend channels and a trend signal. Oh man, that's not great. Just like I said, I think dollar has a lot more downside to come. But the question is, did we have enough of just this time frame range to actually build to new low? I think probably yes, as I see absolutely no reasons for the dollar not to break these things. Lots of people have been buying these low points. I don't know why, but all we can see is that they've managed to push two ways to the upside, barely retracing at 23%, showing some trend signals right after. So it really feels like the dollar is on the verge for more deteriorations. And anyway, that's what I felt anyway. So do we have a lot more room to the upside on cryptocurrencies? I would say, that might sound a little bit too simple, because more than anything else, in order to break out of a range, you need to break the third range boundary. And this is where this pattern really is at play. So I think that the only thing we've managed to do is build an H1 timeframe mature range. Okay, in here you'll see the updates just coming right along. Okay, so 4-hour range, it has been a bullish range as we broke on top of the resistance context for both waves, build a higher low point, and we've bought the intermediate structure within the range. So it has been a mature H1 timeframe range that built itself with a third range boundary in here. And oh great, look at this, guys. This is the structure we've had. Okay, though I don't see any such a thing as a breakout in here, and we still haven't broken the third range boundary. Oh fuck. So people think the dollar is bearish right now, and I feel it absolutely isn't. I think that the only thing we're doing in here is probably extending this H1 time frame range to what's probably going to be an H4 range. So I don't know, but it really feels like some rebounds out there could totally be due, with, of course, pushing later on. And it really feels like a bigger time frame range building itself slowly but steadily. As long as we maintain prices on top of the previous third range boundary, then this is nothing close to bearish. And oh geez, yeah, look at this. Range breakout. I couldn't say it any better than that. It definitely looks like a freaking building range on the higher time frame. So we can eventually dip a toe into slightly lower territory, trapping some bears in here, but I'm definitely not willing to follow these breakouts. They feel like pretty immature at that point, and I'm suggesting a lot more range to come. Very likely building another ugly triangle or something, this really extended ranging structure. And yeah, do I think there is a much more downside potential coming along the way in the dollar? No shit, Sherlock. I don't see any of it. So yeah, I think dollar cannot be that much of a catalyst later on, because we're probably going to have to range in there for a much longer period of time. Of course, can be proven wrong if we were to seriously accelerate to the downside in here, but I'm sorry to say it. I'm believing my signals, and I'm believing what I see in the market, and this definitely doesn't look like the thing you want to short sell. So yeah, pretty much more look like we've built a mature H1 range, and the market doesn't feel like it has consolidated enough, and will probably range longer than that, still maintaining prices below that resistance and probably on top of this support. So as long as we don't break these two boundaries, I'm not confident enough to say that we are ready to trend on the dollar anytime soon. But more importantly, probably going to stand still for much longer periods of time until the election, and probably several weeks later on. Okay, so I'm waiting for an H1 timeframe range to mature, which means we need to build a third range boundary first, and I think that's what we might be on the verge to do. So if there is still some more downside to the dollar to come within the next 48 hours, I think this is just to build a range boundary. So yeah, I wouldn't be buying the dollar because that's not my personal favorite, but I'm definitely not willing to reinforce my bearish exposition to the dollar anytime soon. I think anything we're doing right here is just accumulating for a range. Okay, so patience feels like what's required into dollar assessment. So what can we do about it in terms of Bitcoin? If dollar doesn't have that much strength, but could still go one step below without triggering any such a thing as a trend, so can we still keep pushing the dollar slightly lower? Yes, we can. So therefore, can we push the Bitcoin slightly higher? Yes, we can. We still have plenty of room to work around it, but still what we've seen on the dollar just has its exact same replicate into cryptocurrencies. The recent breakouts we've had feels like they've been breaking out of H1 timeframe range, which in terms of dollar has looked like an ABC consolidative structure, in terms of Bitcoin looked like a triangle. And yeah, we broke out of this triangle, clap, but what did we do? We actually probably created a 4-hour range boundary. So I don't believe in this thing to be a massive trend to follow. It just feels like, oh man, we just broke out of an intermediate range into a much bigger one. I would follow the much bigger one as a reference standpoint. So do I think we're going to go lower than that? I think we're at least going to retest this. That mostly depends on what type of reversal we're going to create in here. If we reverse inside the context or in the nearby area in here, I would probably set course for what's very likely going to be a typical triangle structure, in which, depending on the next wave, if we do 2 sets of waves and mature another range to the downside, I'd be willing to buy probably. that depends on what we're going to be doing in here. If we reverse this way, I'm definitely going to target lower low points. But until then, yeah, if we inch a little bit higher, which is very, very likely, I think there is a limited upside potential. But still, calling it done right now, I don't see it. All I see is the market try to break, which is very likely going to build a range boundary nearby. But until then, I don't see any risk limitation. Okay, cycles are still behaving this way. So yeah, could we have a slight attempt to break? Could be the case. So yeah, I'm not willing to sell just out of this, but definitely not willing to buy as close as this to a massive resistances. Okay, so yeah, just like we could be inching a little bit higher, I'm not willing to buy this. Just like we could violently reverse and push back the bulls. Yeah, I think it's more about an appropriate forecasting in here. So it's really like a crystal ball. Whether you know what the future is made of the next 24 to 48 hours, and you'll be willing to buy a resistance thinking that prices will inch a bit higher, which I think is possible to do, but has to be done in much shorter time frame, because H1 time frame to me looks, oh man, that's fairly resistant. So you would be definitely buying into a resistant territory. Can only be done if you're trading 3-minute or 15-minute at best, but anything higher than that, this is range, this is range, this is range, this is range. So all of this is a huge concentrative cluster of absolutely we don't know where the fuck to go type of behavior. So waiting for this to clear up, and I think it's going to take a much broader time. I think we just broke out of H1 time frame, but still have much larger time frame ranges to deal with. Okay, so as we get to mature the weekly ranges as well, remember that a weekly range takes years to build. So yeah, I think we're not on the immediate verge of a breakout, emergency types of trades like that. I think the best case scenario we're getting to deal with is just, oh man, that's a boring range inside bigger ranges that could still take way longer periods of time to actually mature. So is there any emergency call right here? Definitely not. So yeah, I'm much more willing to see this H4 timeframe range building itself over time. So yeah, I think patience and boring, low risk trading is down the corner. That could be a potential third range boundary. So that should be the low risk trade in this range. But yeah, in my personal case, this without signal is not enough to consider a selling entry. So those who are willing to have either a totally neutral approach of the market, and they would definitely look at selling the market within the context, or those who have a bearish bias, I think these guys are totally willing to trade in the nearby area. Okay, so looking for potential bearish signals for those who want to cover the portfolios for a limited amount of time, of course, but those who are bullish exposed and say, all right, market is neutral, I might be using some cover stuff like short selling a little bit of derivative contracts to cover the potential downside trades, because don't forget that we never know. People think that for now the battle is won and that cryptos are inevitably going to go bullish. And I would say once again, what if? What if you're just fucking wrong? And anytime you think that something is inevitably going to show up, then let me tell you something. Over the years, the market already and always proved me that whenever you think something is inevitable, it always works its way out of it. So I'm not willing to buy this right now because I see people boasting for gains when in terms of actual trading signals, all I see is just way more neutrality, and neutrality is probably going to last even longer than this H1 time frame that felt like endless waiting time for those who've been trading it, and they've been so excited about the breakout. I think they're making mistakes, because yeah, it fairly much more looks like we're going to build a much bigger range, replicating the same shit but to a much larger magnitude. So if you felt like an endless waiting to get this short-term volatility, then you might get ready to have a lot more to come into bigger time frames. So yeah, that is my assessment, guy. I'm going to stick with that for Bitcoin. Now let's finally have a little bit of a link, which is where I'm going to trigger action pretty much rather sooner than later. I'm just waiting for a signal. But in here anyway, I know that anytime we break a support, I'm getting the fuck out of this thing. So I'm just going to tell you about it real quick. No panicking and no stuff like that, okay? Remember that my analysis are my personal things. I'm sharing the things I do with my personal portfolio. I'm not an analyst. I'm not just sharing the knowledge or whatever or selling signals. I'm just telling you and explaining you the best possible way what I'm doing. so you guys can at least understand the process, because that's what matters in here, not the conclusion, but the process. So the thing in here is one of my patterns. When I see an asset that has risen quite violently, that Jesus, this thing has gone really skyrocketing, and I wish I could have been among these trades, but I wasn't. So I try to get in. My memory's right. I got into this area slightly below 10. And yeah, so I'm in gain right now. I made my first profit taking in here to reduce my exposition to this market. And my question nowadays is whether I'm willing or not to just entirely get the fuck out and just take my entire gains and willing to buy lower later on time. And I think that's an answer I'll get within the next 72 hours. Or I'd say, yeah, within the week, I think I'm going to get this answer. So if this market were on the verge to fail below 12, or I'd say below 13, or at least closer to this trend, to this breakout in here, I would call that a red flag to me, because this market is actually one of those things in which I have a set of rules. When I see a market losing more than 60% after rising like that, flashes the red signal for a crashing market into my brain. So that doesn't mean every market behaving minus 60% after a strong and solid raise will inevitably be on a crashing pattern. But I think in here, we'd have all the elements and underlying structure for a market that is on the verge for crash. That doesn't mean the market won't recover later on. It just means the pattern I need to trade with those markets is a crashing pattern. So I feel like if the market reactivated out of this area, it would have been a strong market. But the fact that it didn't, and it dipped a toe in here, and that the volume rised as the market gone lower, and all of those things, the fact that we dipped a toe below the moving averages just signals a lot of, oh man, this isn't going well. So yeah, losing 60% in a streak, having this pattern of doing it in two sets of waves, and more importantly, this thing, okay? Really, I'm standing for this. If we've reactivated pricing here, I would have a totally different reaction on this market, but this isn't good at all, okay? It looks like we're on the verge for a hope phase in here, which is basically a two sets of waves retracing barely 38% fib, which is, yeah, 38% would just be there. So if we were failing below 38%, remember that this is just yet another trend follow. And just like people don't understand that these markets can go from bullish to bearish, I'm here once again to remind it to you. If this market is on the verge to failing here below 38% fib, not good at all. That would be just another hope phase. Just to give you a glimpse of what I'm talking about, this is the exact same thing as Bitcoin experiencing its pullback over 12K. People back then were just, oh man, this is bullish. We've reactivated. There was just too much bullish into a market that was sending quite some mixed signals back then. We had the same retracement into sets of waves, people getting overexcited about the market. And I so much remember me back then saying, oh geez, I'm going to sell the crap out of it and see what it goes, but I'm definitely not going to buy until we get short-term volatility. Video up there to prove it, okay? Back then, I recorded all that shit, and this is exactly the same thing I'm willing to do with Link. I think we're here nowadays into Link, and that what's down the corner is a much, much more painful market, in which I think I can buy half the current prices, just like it was buying half the 12K back then. So I think, yes, just like starting to buy Bitcoin, and this is where I started to buy Bitcoin. So I think this is where I need to start buying my links, but I think the timing is fairly not appropriate. And just to give you the magnitude of it, regarding the time it took to go from point A to point B in here, it took us twice or even three times the amount of time to get from point B to point C. So that just gives you an approximate area of what I think as a link. As long as this pattern goes on, and if we were on the verge to fail below 12, I would definitely get the fuck out of here and probably wait for much longer than that, probably halfway through 2021. But that would be just 1/3 of the global pattern. So take this, put it 3 times later on. So yeah, that would give me Q1, Q2 2021, which is exactly what I think is the buyable area for crypto in general, Bitcoin, Ethereum, whatever. I think we need a desert crossing phase, not a long, painful one like last year's Bitcoins, but probably just another one with a few quarters of waiting for prices to stabilize before actually eventually triggering a bullish stock market. If you have a look at the dollar is on the verge for quarterly timeframes moves as well. So what is it to just wait for a couple quarters? I think we have everything we need to do out there. We just have over speculations and stuff like that. So yeah, I think, is there some more blood and boring market down the corner for cryptos? Yes, I think that's about it. So until proven wrong, that is going to be my personal stance out there. Not following those trends, because I don't think they're trends. I think they're just looking for another broader time frame range boundary. That's all about it, guys. Until then, yeah, patience for me, and we'll see all about it. See you guys in a week.